Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me today is Chris Dobbin, President and CEO of Nova Leap Health. It's a publicly traded company. The symbol is NLH on the TSX Venture. Chris, thank you for joining me, and Happy New Year.
Thanks for having me, Robert. Appreciate it, and Happy New Year to you as well.
Absolutely. So before we get into an update, because, we've done a number of interviews over the years, and you actually, Nova Leap just participated in our Planet MicroCap Showcase virtual that went out on December 6th through 8th. Before we get into all that, quick one-liner, for those that don't know about Nova Leap Health, that one-liner of what the company does.
Yeah, sure. We're an in-home care company and primarily in a private pay space.
Very good. All right, so let's get a quick update. It has been that long since we put out that presentation where we had a little bit of Q&A at the end. We put that out early December. So quick update maybe since then, and then we'll go from there.
Yeah, just a brief interview. The last results we had obviously were Q3 results. We'd made a number of changes in Q2 that we indicated should have positive results for Q3. I think we demonstrated those results pretty well. I think it was our second largest EBITDA, or largest EBITDA and second largest revenue ever. So really good momentum as we were entering to the end of the year. We haven't been as active in the past, this past year as we were in previous years on acquisitions. That has predominantly have to do with the capital markets. So really just been focused on operational improvements and paying down the debt. So from that perspective, we're in a pretty good spot.
Absolutely. Well, I want to harken back to one interview that we did back in November 2021, where we discussed how you publicly guided that the company's 5-year targets to hit 100 million in revs. Where are we on that journey?
Yeah, well, we're still that's still our goal, and I've reiterated that in the past. As we look at that, I remember when we put that press release back out. Really what we're doing is we're looking at where we were at that particular point in time and what we thought we could achieve over that 5-year period. And then we kind of work backwards as a bit of an average to say, is this reasonable? We can do that. And I still think it is. Now, having said that, we're a little bit delayed on the acquisition front in terms of where I thought we would be. And a lot of it has to do with the way the capital markets are right now. But when we look at the deals that are out there, the ones we've looked in the past that are potentially still available, there's a large pipeline of opportunities. And so, and we'll get back into the acquisition mode at some point when the timing is right. So from our perspective, that's still very much an achievable, target to put out there. We're roughly at the $30 million mark. So, we're making some headway, but it's still a long ways to go to achieve it. But I still do think it's achievable at this particular point in time.
So when you say that things are delayed because of, where things are in the capital markets, and let's understand that a little bit better. Does that mean because the company needs to raise capital in order to get some of the acquisitions done and you don't want to raise at bad rates? Or give me a little color there.
Yeah, there's a couple of things when you look at our balance sheet. One is obviously we've got some cash on a balance sheet and our debt has been paid off. And so from that perspective, as we continue to look at building up our EBITDA, as we pay down the debt, then usually when companies look at us, they'll look at us from like how much EBITDA we have and multiply that by say 3 times on an annualized basis. That's a reasonable number to use. 3 times EBITDA for like a cash flow type company where we don't really have tangible assets. So if you think about that as sort of a metric, that's how a bank would look at that's pretty normal. So we do have the ability to go out and get more debt as we continue to make the operational improvements. So that's one way that we can get non-dilutive financing. The other way we look at that is say, well, how many acquisitions would we actually have to do to get to 100 million of revenue from where we are today? And it's a number. There's a large number of acquisitions there. And so in today's environment, given the lack of liquidity for companies our size in terms of being able to raise a certain amount of money, and given where our stock price is right now, we wouldn't go out there and raise $10 million today. That would get us a long way towards where we want to be from an acquisition perspective. So that's what we're talking about in terms of being a little bit delayed in terms of where we'd be and the impact of the capital markets. If the capital markets were flush with cash and people were looking for growth stories, then it'd be a bit of a different ballgame as it has been in the past. But for now, we're just gonna pay attention to the operations and we'll see when there's a larger liquidity that's out there at some point in time.
Because it's not for lack of potential acquisition targets right now, right? It's just a matter of making sure you're doing the right deals.
Oh yeah. I mean, there's lots of acquisitions. There will always be acquisitions. You think about our industry, really, you have thousands of home care companies, and then a lot of those home care companies have people that are at the age that they want to retire. And it may be simply because they've achieved some age, some health issue, or just they're tired through COVID, whatever the reasons are. Like, there are lots of acquisition opportunities. It's really just a matter of, what's the right time for our company to raise money. That would be a sizable amount that will allow us to accelerate the acquisitions. That's all. So good thing is we don't need to do anything, right? And we should have available debt to make acquisitions as we continue to make operational improvements. So I'm not worried about having to do acquisitions down the road. It's really balancing the potential dilution that would exist if we want to do sizable acquisition.
Absolutely. All right. Well, Chris, with that, I mean, where can our audience go and find more information on Nova Leap and get everything that they need?
NovaLeapHealth.com is probably the best way to go. We usually have our investor presentation updated after each quarter, so it's probably the best starting point at this point.
Very good. Well, Chris, thank you so much for joining me again. Really do appreciate it. Good luck. Stay safe. I look forward to our next update.
Thanks, Robert. Appreciate it.
Thank you.